Hey, what's going on everybody? It's Sam with the Humble Outliers. Today's video is going to be covering some strong buy mortgage REIT stocks. Let's dive in to see if this is still a great opportunity to invest in your money. Are there still opportunities to 2x or even 3x your money in some of these mortgage REIT stocks? As we all know, mortgage REIT stocks and REIT stocks in general have took a massive hit. Some have dropped as much as 80%. So we're going to dive into this video and seeing where we are at the current state, seeing if it's still a good opportunity to get in there, and also looking at the risk involved and seeing if it's worthwhile to maybe not go in. Before we start, please smash the like button down below, and also please subscribe if you haven't already. Any support you can show, I greatly appreciate it. Thanks again. And let's go over a quick update portfolio. You can see here that it's been a pretty good day. The Dow gained over 500 points. My account is up 8,000 for what I've got in the holdings. Got quite a bit in cash holdings just in case things drop a little bit more dramatically. I have an image here, and we can look here at the 1 year. It's dropped quite a bit with the whole COVID, but you can see that it's near 25,000 already for the Dow Jones. So it's pretty remarkable how fast things have recovered. Still a ways to go, but it is interesting to see how much things have gone up. I think a lot of us are still suspicious of the market and are holding some cash or just waiting patiently to see what's going to happen next. But let's go ahead and dive into what this topic's going to be covering about in this video. So mortgage REIT stocks have taken quite a big of a hit. You can see that some of them, if you've looked, have dropped as much as 80%. MFA Financial is down to $1.78, and just a while ago it was at $7.59. You can see here that over the horizon it's always hovered above at least $4 or $5 since back in 2000. So we're going to cover 3 of these mortgage REIT stocks that have a strong buy. More specifically, we're going to be diving into also MFA Financial. This is one of the companies that I currently own, and I'm going to be holding for quite a while. They've got a June earnings coming up on the 16th, so that'll be interesting to see what they reveal. So with that said, you can see here from that in a 1 year mark, there's a good opportunity that if it ever returns anywhere close to what it was, there's a good opportunity for you to double your money or even triple your money. So it really depends on what your investment strategy is and how long your horizon is. I plan on sticking this for a little bit to see where if we can come up, maybe have a chance to double or triple up depending on what kind of news comes out. We all know that things that are impacting the market are the high unemployment rates, also the incidence of what's going on with the pandemic and a lot of shutdowns, lockdowns, the fear of it coming back, resurging. Also, governments as a whole in the United States and other parts of the world have really locked things down. And as we slowly start to reopen our economy in the US at least, we'll see, what the impact's going to look like, how people are going to go back to work, what the economy will look like. We know that mortgage REITs are typically different from their counterparts of the property equity REITs, and where the fact that they own property and they're gaining money from their leasing through their commercial agents or commercial partners. Mortgage REITs relies heavily on leveraging the mortgages that they're purchasing and getting. So with that, there's going to be many people that are not currently working, with the unemployment claims being so high that they are. And with that, most people hold these type of stocks, mortgage REIT stocks, because of the high dividend yields. Many of them have suspended that. The same with MFA Financial. They've suspended their dividends as of now, as they're trying to preserve liquidity to stay afloat. So the 3 that are listed as a strong buy based on CFRA is first Invesco Mortgage Capital, ticker symbol IVR. The second being AG Mortgage Investment Trust Incorporated, ticker symbol MITT. And the third being MFA Financial Incorporated, ticker symbol MFA, which will be around the discussion of today's video. We can see here that they've got this risk evaluation set as a high. But some of the commentary is that it's a strong buy recommendation based on its core. From the commentary section, you can see that MFA has a strong buy recommendation based on its score. It has a growth and valuation model subcategories that are two largest drivers. Growth includes factors that measure EPS growth and stability and cash flow growth and stability. Valuation includes factors such as price to earnings, price to EBITDA, and price to cash flow. And also in new constructs, MFA Financial is listed as also a strong buy, very attractive rating. It's ranked at the second of 195 real estate sector stocks. It's a very attractive rating because it means this stock has superior upside potential with low downside risk. So the valuation measures for MFA Financial are really good. The price book sale ratio is 0.22, and their PE ratio is currently at a forward PE at 2.14. You can see that it typically hovers around 10 in 2019. A little bit more about MFA Financial. It's a mortgage REIT that invests mainly in non-government guaranteed mortgage-backed securities and mortgages. The company does have some agency government guaranteed exposure, but it's only about 11% of its assets. MFA has been beaten up, as we can see, from down 81% year to date. The company has gone into forbearance with its repo counterparties and suspended its dividend. Forbearance means the company has been unable to meet its margin calls and has agreed with its counterparties to hold off liquidating until a specified date. So, what is a repurchase agreement? This is something that's tied directly with MFA Financial, these mortgage REITs companies. So pretty much every mortgage has been hit by margin calls. The REITs that mainly invest in government guaranteed mortgage-backed securities have been able to find a way to meet the margin calls, largely by selling investments. The ones like MFA have not been able to sell investments due to a lack of liquidity in the markets. Mortgage REITs generally finance their investments by using what is called a repurchase agreement, also known as a repo. Here's how that would work. So let's say a mortgage REIT buys $100 million worth of mortgage-backed securities in the market and wants to buy more. It approaches a bank and asks about entering into a repurchase agreement. The bank says that it will do a 360-day repo at a 5% haircut. What that means is the mortgage REIT sells those securities to the bank for $95 million and then agrees to buy them back in a year at $100 million. The idea would be for the REIT to take that $95 million and go out and buy more securities. If the mortgage REIT is unable to pay back the loan, the bank has the securities worth $100 million as collateral and can use that to make itself whole. Under normal circumstances, this whole process works smoothly. And forbearance, unfortunately for the mortgage REIT sector, the value of collateral, let's say an example of the $100 million worth of securities, began to depreciate. When it looks like the value of collateral is in danger of falling below the value of the loan, the bank will ask for more collateral, usually in the terms of cash. If the REIT cannot come up with the cash, then the bank has the right to sell that collateral in the market to make itself whole. Note that this is identical to what happens if you trade on margin and fail to meet your margin call. Your broker will sell your stock to pay off the loan. Most of MFA's portfolio consists of illiquid securities and whole loans, which are extremely to trade even in a normal market. It is extremely hard to find buyers right now because every mortgage REIT is in the same boat. So MFA entered into a forbearance agreement with its bankers where they agreed not to sell the collateral while MFA tries to figure out of its predicament. MFA has been selling assets and using the proceeds to pay off repurchase agreements, but has only sold 8% of its portfolio. MFA's forbearance agreement with bankers ends on June 1st. So with that all said, it'll be very interesting to see what happens with these mortgage REITs companies and how maybe the Fed will help them out, what's going to go on with the banks. It'll be interesting to see once things reopen, how people are moving about. People are going back to work. There were a lot of people still getting stimulus checks, unemployment checks. Hopefully the second round comes through. Hopefully, Congress will work on ways to increase the money to help people out, to ensure they're paying their mortgage rents. Also, banks as a general have been helping people with this process as opposed to expecting all their backed mortgage at once. They've now are moving that to backing that towards the end of the loan, so it doesn't really impact them immediately. But it will be definitely interesting to see what happens in this area. I have positions in MFA Financial. I'm going to be holding those in and seeing where things go. There's going to be the earnings call coming up on next month, so that'll be interesting to see what happens. Let me know what you guys think. Are you guys looking at mortgage REIT stocks or REITs in general? Good luck to you all out there. Subs if you liked this video and would like more. Thumbs up if you enjoyed it. Talk to you all soon. Take care. Peace.